So it doesn't happen that often that we are in an environment, contextually speaking, where, for example, we have our altcoin being semi-pro from an accumulation perspective, and then the major being semi-counter from an accumulation perspective. And we also saw in the live trading examples that it doesn't happen that often that you find yourself in that situation. So I would like to give you guys two more examples of a B environment, contextually speaking, and tell you guys what you need to be aware of and pay extra attention to as you are trading the potential model. Because I do sometimes trade a model that is in a B environment, contextually speaking. I am just more strict regarding certain variables. So the first example right here is going to be on XPL. And XPL is also a setup that we have traded live inside of the community. And when we analyze the context right here on XPL, basically what we can see is that price right here had a ranging environment and we pushed up aggressively towards the upside. And on that push up right there, we left behind some high quality demand POIs, where right here we can see a super clean 1 hour OBIF right there that swept liquidity on the left in here, and on a lower time frame also had an actual inefficiency right there. So we can see that we have that lower time frame inefficiency also being present. We can see we have some lower time frame structure demand right there, lower time frame structure demand in the upper section of that 1 hour block as a whole. And we can see also the lower time frame inefficiency even on the 5 minute. So we can clearly see price sweeps liquidity on the left, reverses back towards the upside, and this is really the sell to buy that created the aggressive expansion, all the way from 0.7 up to around 1.7. So we have a very high probability demand POI in here that price could come back for. And right above that demand POI, we have our liquidity. So right here, we have the higher low that forms after the demand getting created, kind of highlighting where that inefficiency is located. And right there, that's going to be our sell side liquidity target, okay? Now, what we can see right here, if we have to analyze the context on XPL, we can see that price has broken aggressively towards the upside on the higher time frame, confirming that high time frame breaker structure, and we have left behind a high probability demand POI. So overall expectational order flow based on this break would be some sort of a higher low for a higher high. Now, when we analyze how price is pulling back, we can also see that we are located within a semi-pro environment from an accumulation perspective, because basically ever since this low right here that actually created structure supply, basically ever since, price has come down, taking the lows, creating exhaustion towards the downside right here. Let's make them dotted. We have taken lows, creating exhaustion towards the downside while leaving the highs intact. So we can really see that price is taking the lows over and over again while creating that curvature of buy-side liquidity while approaching our demand level. So as established in the theory lecture, right, we can see that price is leaving the highs intact. We're creating an exhaustion towards the downside. And then we establish our high probability ranging environment right here where we can look for potential accumulation schematics. So looking at the context, we have our high time frame breaker structure, our expectational order flows, a higher low for a higher high. And right here, we are creating exhaustion, leaving buy-side liquidity above as we are approaching our key liquidity and key demand level. And now from here, what we can see is that price has a tab 1, we have a tab 2, we have a tab 3 right here. Price pulls back into the created supply because the move down into the third tab is very aggressive. And then from here, we pull back into the extreme because right here, we have a higher low that swept the extreme liquidity on the left. Therefore, that is not your extreme liquidity target because it swept the liquidity of the initial expansion. And then on a lower time frame right here, we have a demand POI, okay? So what we can see right here is that price has a 1, has a 2, has a 3, model 2 accumulation, and then from there we mitigate the supply, we pull back into our extreme demand for the higher time frame fourth tap, and then the pullback right there creates a beautiful curvature of buy-side liquidity. So we have an extended model 2 accumulation that is meeting all the high probability variables. We have a beautiful demand POI, we have great displacement, we're coming into a key POI, high probability to return to zone. The range duration is also multi-day, right there in that 3-day and 15-hour category. And the overall model is developing in an extremely high probability way, right? We got that range in efficiency, return to zone, quality, in this case, fourth tap POI, and also a quality breaker structure right here on the lower time frame. So right here, we broke that structure back to bearish with a convincing close above. And this was also that long opportunity, putting the stop loss below, targeting a high on a relatively high RR play right here, which is 5.4 RR. So this is, just looking at XPL right here, this is an extremely high probability setup. Contextually speaking, on XPL, we have a semi-pro environment from an accumulation perspective, and then the model itself is meeting all the high probability variables, in this case having that return to zone with the quality third tap POI, with the quality break, and even a range inefficiency where there's no price action right here in the premium section as you confirm your model. Now, when we analyze our major Bitcoin alongside XPL's development right here, we can see that on Bitcoin, if we put some lines right here where the starting point of the range developed up until that confirmation right here, we can see that simultaneously in the Bitcoin chart, we are in that upper section of that overall macro distributive price behavior. Let's move this like this. What we can see on Bitcoin, if we go towards that high and we match the lines right here, we have the starting point of our range and we have the actual confirmation. So as XPL is coming down into key support, creating an exhaustion and establishing a semi-pro environment contextually speaking, we have Bitcoin moving upwards right here. We have Bitcoin moving upwards, having deviated the range high, creating at that point in time a new all-time high. So looking at Bitcoin, we are in a semi-counter environment because we're moving up into potential resistance while being located at the range highs, which is favorable for shorts. So we have Bitcoin being semi-counter and we have XPL being semi-pro. So we have found ourselves in an environment where we have a rating and ranking of B, contextually speaking. Now, when I find myself in these situations, I really pay attention to two things. First, I'm looking at the individual altcoin itself. And I really need to see a model that is developing, which is extremely high probability with all the high probability variables aligning, allowing me to get an entry on a quality break on a decent RR, which is also eligible for faster de-risking opportunities, which kind of goes hand in hand with a higher RR, because if you get a refined entry, right, your RR is going to be higher, but also your de-risking opportunity is going to be faster. And what I mean with de-risking is that there wasn't any demand created in that push up right there. So as price breaks structure, if we were to develop an immediate higher low for a higher high, because there is no demand between this point and that potential higher low, I can already trill my stop loss towards that higher low the moment we make a new high right there. And then I can already partially de-risk my position. And if I could find my entry right here on the lower time frame, let's say on the lower time frame right there, we have even more refined structure that we can use. And I can find that local entry and the RR is higher. But also if we get a local higher low afterwards, I can already immediately trill that stop loss towards that higher low as long as there's no demand created that price could come back for. So first, I want to find a really convincing entry allowing for high RR plays and therefore also faster de-risking opportunities from a trailing perspective. And if we have that higher RR opportunity, if price starts pushing back up into premium and we are up 4 or 5%, we can already take a partial TP in case of no trailing opportunities and simply operate risk-free. But I am acting more strict with the high probability variables of the individual model, and I'm looking to de-risk faster because I'm trading semi-counter context. And I know when Bitcoin is going to be reversing, this accumulation model is simply going to get invalidated. So on the individual altcoin, I'm paying close attention to all the high probability variables aligning for there to be no room of error. And then I'm looking to de-risk faster, either through stop loss trailing or partially TPing. And that is basically whatever the market allows us to do. If we created an immediate higher low right here, we control our stop loss. In this case, that wasn't the case. We pulled back up, creating yet again another return to zone. And then right here, when we made new highs, you control that stop loss towards that low right there. And then once this completes, you can also take a partial TP. Now even less because the stop loss is trilled. And we're partially TPing to simply de-risk, not particularly to realize any profits, okay? Now, at the same time, around the moment of entry, despite Bitcoin being semi-counter, looking at the overall range development, I want Bitcoin to be at a local support POY in case of an accumulation schematic. So we have deviated the high right there and we were pulling back down right there after the deviation. However, despite being semi-counter, locally speaking, we were located at a demand POY right here. Okay, so locally we were at a demand POY, which could cause a local bounce towards the upside. And as we create the local bounce on Bitcoin, that could potentially already complete the accumulation schematic on XPL. So despite being semi-counter, if we are at least at a local, decent looking POY, the chances increase of our B setup playing out. So in this case, we can see that price was at a local POY at the moment of entry. As you can see right here, we had that local bounce as right here we established that break of structure confirmation. And like I say, the markets move in sync. So if we look at where the model completed itself, which is right here, Bitcoin also went up higher at that same period of time. So Bitcoin ended up going up once more, deviating the high yet again, which completed the accumulation schematic on XPL right here. Okay? So as we are in a B environment, if I still want to be taking the trade, I want my individual altcoin to align with all the high probability variables where from an entry perspective, I can find a refined entry, allowing for high RR plays and therefore faster de-risking opportunities through stop loss trailing or partial TPing or both. And I want the major, despite being semi-counter, to be located at a decent POY. If the break of structure right here took place as we were coming up right there into the all-time high, I'm not taking it. But because we were pulling back already in a local level, despite being semi-counter, we could still get a local move up because there's no confirmed order flow objective yet of getting the rotation back down. We are expecting an overall rotation back down. Okay? And now lastly, what I want you guys to be aware of as we are trading our altcoin model, and this is more from a sentiment perspective, is don't become now too bullish. Understand that despite the model having the chance of playing out, because you are semi-counter on your major, expectational order flow for the individual altcoin should be for price to complete the accumulation schematic and use that buy-side liquidity to fuel the next move down. That is what your expectational order flow should be. I see it happen quite often, and I've experienced this with myself as well in the past, where you are now longing an altcoin, and because you are long and your profits are increasing and you've realized 4 or 5%, you're kind of in a euphoric state of mind, completely forgetting that you should be bearish, right? Because it's quite difficult sometimes to stay aware of the fact that despite being long, you should overall be bearish and look for distribution opportunities elsewhere where we have a semi-pro and semi-pro environment and therefore an A category from a contextual perspective, despite being long as well, right? So don't let the long position blind you from actual reality, which is that you are trading semi-counter on the major and you are better off finding a distribution alongside Bitcoin's expectational order flow. And you can also see right here, that's exactly what happened. We deviated that high right there and we just absolutely nuked towards the downside again. Even disrespecting the demand that was created that caused that push up, right? And we dumped aggressively as Bitcoin also was ready for the reversal. So don't think, oh, we're gonna make new all-time highs right now. Simply take profits, and you can always take a partial profit and then try and find short opportunities, and then you're basically going to be hedged, right? Which is always the best opportunity to be in. So quick conclusion regarding the B setup example here on XPL. You want every single high probability variable on the individual altcoin to be aligning. You want to have a refined entry allowing for faster de-risking opportunities, and therefore you can also de-risk faster as you are in the trade. And your major, despite being semi-counter, needs to be located at a local support POI. Then I'm taking my B setup trade, and most of the time, you're either realizing some profits or at least you're getting stopped at break even. Okay? Now, the other example is actually from a most recent situation that we also already briefly discussed, which is on Doge right here. So let's get rid of that replay mode. Perfect. So let's analyze the context right here on Doge. So on a higher time frame, Doge is located within this ranging environment where we had that high time frame Model 1 distribution that created the range highs, followed by that full reversal back down. Now, what we can see here is that price has been moving down into extreme discount, taking the lows and leaving the highs intact right here. Taking the lows, leaving the highs intact, right? Building up that overall buy-side liquidity. So we have been coming down, approaching extreme discount, leaving buy-side liquidity above, and from there, we have established a ranging environment right here. We have established a ranging environment where we have our tab 1, we have our tab 2, and we have our tab 3 right here, where the third tap mitigated our extreme demand on a lower time frame here. So right here, I think it was the 30-minute block. There you go. So right here, you can see price sweeps that local low, creates your 30-minute OBIF right there, which is acting as your extreme demand. And that's what price also came back for over the weekend. So we can see right here that price has a potential Model 2 accumulation schematic with a fairly decent return to zone from range high towards the range low, with some local supply in that area, but nothing too significant, and lots of buy-side liquidity above, right? So we have a potential Model 2 accumulation schematic on Doge in a semi-pro environment because we are approaching extreme discount and that overall tab 1 region of our macro range while taking the lows, leaving the highs intact. So we have Doge being in a semi-pro environment, contextually speaking, establishing a potential accumulation schematic. Now, as we analyze Bitcoin simultaneously with that range creation right there, we can see that the range on Doge started right here and the third tap right here. Now, the higher time frame on Bitcoin is macro bearish because we have our macro range right here that has had all those deviations towards the upside, but the confirmed order flow objective of that situation with the distribution at the highs is going to be the 74K low. So macro speaking, you are bearish. And then if we analyze this local environment right here, which is simultaneously with the tab 1 and the tab 3 on Doge, we can see that Bitcoin has been moving upwards into potential resistance, with our highest probability supply POI being the 98K order block creation right there, which has lots of overlapping supply. And right here, SFPing that market structure point. So simultaneously with Doge being semi-pro on a higher time frame and then establishing the accumulation schematic, we have Bitcoin moving upwards into potential resistance. So Bitcoin is moving up into potential resistance and Doge is accumulating. So our major is semi-counter related to a accumulation schematic because we are moving upwards into potential resistance, having that move away from the bottom, followed by that move into potential resistance, and simultaneously, Doge is accumulating. So we have Bitcoin being semi-counter from an accumulation perspective, and we have Doge being semi-pro. So we have yet again found ourselves in a situation where we are in a B environment, contextually speaking. And when we look right now at those details that I have been talking about, we can see that first, let's focus on the individual high probability characteristics of our individual altcoin model. We have a decent return to zone in this environment, but let's start looking for accumulation entry opportunities. When I'm looking to find an entry on this accumulation schematic, from a break of structure perspective, this right here is your market structure as you are mitigating that third tap right here. The break of structure right here is a, let's analyze, I think 45-minute or 1 hour. This is a 1 hour market structure pool, and therefore we need to wait for our 1 hour market structure to break back to bullish, which takes place right there. But as we are taking that, or as we are confirming that breaker structure, you are coming towards a supply POI on the left right there. So our close is directly in a supply POI, which is not the most convincing, right? I would rather want to then see a retracement followed by a level 2 breaker structure for price to then break that market structure back to bullish right here. And then locally speaking, pull back with new market structure creation that we can use for a level 2 breaker structure to confirm the rotation back up to sweep all that buy side liquidity. But price didn't get that. So we got a very aggressive move down right here. Okay, a super aggressive move down, basically a dump, literally a dump move down from high to low, and then a slow move back up. So from an entry perspective, there's not a high quality entry right here on a refined entry that is confirming an easy rotation, an immediate easy rotation back up. Because if you're going to enter on that 1 hour break, you're entering at resistance, but also right here, you're entering pretty deep in the range overall, closer to the EQ, and the RR is only 2.29, around 2.3 right here. So there's not going to be an easy de-risking opportunity from a trailing perspective because price right here is higher up in the discount area, closer to the EQ, and the RR is only 2.3. An entry that I would like to take if something like this develops is a fourth tap entry, where price right here pulls back into the extreme, creates some sort of an extreme POI right here, which we had a lower time frame overlapping effect, and then get some refined, and then a local pullback, where the local pullback establishes a return to zone, and then you get that breaker structure back to bullish. Because then we can trade the refined fourth tap in here that has an easy rotation back up, and just by price going up there locally, we are already up 4.3%, and we can easily de-risk and then leave a runner for higher levels. So I will be willing to trade the fourth tap if it establishes in a high probability environment, because we don't have that refined entry for faster de-risking opportunities. But the third tap right here doesn't have that. So I'm not participating in that third tap area entry right there. I'm not. I'm pre-planning a fourth tap if that is the case. Okay? But this is an example of no high quality confirmation in the area. Now, the second requirement is for Bitcoin to be at least in some sort of a demand POI. And that is actually what took place. So we had refined overlapping demand in this area right here. And price was pulling back with a failed distribution right here. This was not a proper distribution. And we were leaving behind a lot of buy-side liquidity. So price, locally speaking right here, pulled back with a lot of buy-side liquidity, and we came into the extreme demand POI. And since we are moving up into potential resistance without having had a proper distribution confirmation yet, we could get that local move back up, taking those highs. And in that local move back up, we could get Doge to potentially complete the accumulation schematic. So Bitcoin met the requirements. But the altcoin, Doge, right here, was lacking the high probability confirmations from a refined perspective. And you can also see the moment Bitcoin starts to deviate that high, showcasing signs of distributive price behavior, and you come back down, this sells off aggressively right here, invalidating, technically speaking, not invalidating the accumulation model, but invalidating the high probability variables amongst this model. And I wouldn't expect this model to completely reverse back up here again. I'm thinking something like this might happen, right? But if you were in a refined entry from here, you can easily de-risk as price is taking the buy-side liquidity because you are up around 10%. And then taking a small TP is immediately de-risking yourself. And maybe also after the higher low, you control that stop loss. If you were entering right here, and price is at the highest point right there, there's nothing that you can do. You cannot troll your you can troll your stop loss to here, but you cannot troll your stop loss to here because there was still demand. And you are only up 1.7 RR. So you would have to take around a 50%, more than 50% TP to de-risk the position. And then you're basically not making any money in general. Maybe like 1% if you hit your technical target, max 2, which is not something I'm operating on. So here you can see a B environment where I'm not taking the trade because we are lacking the quality confirmation on the individual altcoin itself. And you can also see that the overall accumulation model is failing because we're trading semi-counter compared to the major. And if we were to complete this, my expectational order flow is going to be for an eventual continuation towards the downside due to the distributive price behavior on the major. Okay? And you don't want to be trapped into only thinking bullish price action just because you are long and you are in profits, which requires a certain level of awareness. Okay, so here are simply two extra examples on Doge and on XPL of also setups that we were monitoring and traded in a live environment, and the traded part was on the XPL part, not on the Doge part right here. And the requirements are to get that quality refined entry while all the high probability variables are aligning, and then to get that local demand POI in case of an accumulation on the major despite being overall semi-counter. Okay? That is going to be it for more examples of a B setup environment, contextually speaking.